Hello, good afternoon, and welcome to this special edition of Closing Bell with me, Yatin Mota, on this Moneycontrol broadcast live. If you talk about the markets today, they have been slightly on the softer side. If you look at the markets for the week gone by, Nifty is down nearly by 1%, and a lot of action in the result specific trades. Now let's talk about the market which went about today. We ended the Nifty lower by nearly 0.5%. Nifty was down nearly 82 points. We were stable close to that 19,550 mark. So the market is trying to get some support at the 19,500 level. As far as sensex is concerned, we lost nearly 230 points today. Nifty Bank almost flattish, but the real correction or the downtick happened in the mid and small cap stocks, wherein the mid cap index was down over 1 percentage points, and small cap index also losing by almost 0.8%. Advanced decline ratio, which was slightly better yesterday, worsened today, almost 1:2, wherein one advance had almost two declines happening in the marketplace. Sectorally, we were totally in the red, so no sector in the green. As far as PSU Bank, metal, FMCG, pharma stocks are concerned, they were the top losers. As far as the sectors are concerned, PSU Bank and metals, top losers being down nearly 1.5% on an average. Now, if you look at the market stats, the Nifty 50, Kotak Bank as well as ICICI Bank looked smart in trade. Obviously, they will report their earnings tomorrow. So ahead of the earnings, Kotak Bank rallied nearly 1.8%. IndusInd Bank, now yesterday, there was a result reaction, but more importantly, IndusInd Bank is now eligible for the MSCI inclusion in the November review, and hence that stock is gaining traction, wherein buying of nearly 1.5 crore shares is expected, and that would translate into more than $250 million of inflow. So that stock was up 1.5%. TCS, SBI Life and NTPC were the other gainers as far as the Nifty 50 is concerned. On the losing side, we had ITC, the top loser in the market, 2.5% down because the results slightly disappointed. The operating performance because of the paperboard division dragged down the entire financials, because of which there was some bit of profit taking at high levels. Tata Steel, Divis Labs, HUL post the numbers, saw some negative reaction. So almost 2% down for all of these names. What was doing well is the likes of HDFC Bank, IndusInd Bank, and as I said earlier, ahead of the results, Kotak Bank also looked quite strong. Now, if you talk about the Nifty 50, clearly IGL, and we'll talk about it in detail, that stock was down 12%, MGL down 8.5%, Century Textiles, after reporting a quarterly loss, moved down by nearly 6.5%. Obviously, the management does expect improvement in the textile business after the restructuring. So Century Textiles is one stock we'll keep on radar. What stocks did well in trade today? BBTC, which is Bombay Burma Trading Company, up 20%. Angel One, MCX, ICICI Securities, BSC. So the exchange stocks as well as the brokerage stocks were doing well. All of them hit fresh 52-week highs. In fact, MCX and BSC, both of these stocks gained anywhere between 4 to 6%. Suzlon, that stock is at a multi-year high. Stock up 3%. Paytm, Equitas Bank, Supreme Industries, Colgate Palmolive, Nestle, all of these stocks hitting fresh record highs. So strong moves coming in for stock specific companies, and the market has been really focusing on earnings right now. So the companies who have been able to deliver good earnings have been witnessing some strong price and volume action. Now we've spoken enough about the markets, and let's now talk about the stocks which are on our radar today. Starting with IGL, today the stock was down as much as 12%. This is largely to do with the fact that the Delhi government has introduced a cab aggregator policy, in which not only Ola, Ubers, but also e-commerce transportation companies will have to convert their fleet into fully electric by the year 2030. Now, this means that the commercial car volumes of gas in the city should go down. That is the reason why Jefferies downgraded IGL. They have cut the target to 465 from the earlier 565. Now, the reason Jefferies believe that there could be some earnings pressure for IGL, because if the electrification of Ola, Ubers happen in Delhi, that could mean some serious volumes loss for IGL. In fact, the brokerages estimate that nearly 75% of IGL volumes are driven by cab aggregators like Ola and Uber. And since the government is proposing, or rather has already moved for approvals of the Lieutenant Governor in Delhi, it is more or less given that the electric vehicle transition will start soon in Delhi. This could impact 30% of IGL overall volume starting FY25, and new gas accounts for nearly 88% of IGL's gas volumes. For FY25 and FY26, they have reduced the EPS targets by 7 and 9% respectively, which means that moving ahead there could be some risk for IGL's overall earnings and gas volume growth. Probably that is the reason why the stock fell 5% yesterday, and today also the stock of IGL was down by nearly 12%. So this was IGL because of the electric vehicle policy of the Delhi government, clearly seen under pressure. Obviously, not to forget that IGL was one of the top losers in the F&O segment as well. Shifting focus from IGL, which is a gas company, to Voltas, which is an air conditioning company. The focus really is on Voltas, given the fact that the earnings once again disappointed investors. Now, the company has been able to maintain market share in Q2, but the margins have taken a big hit, given the fact that there were unseasonal rains. There were the effects of El Nino, which were not really felt in India in terms of the heat wave. So probably the AC sales were not that good in the second quarter as expected earlier. There was a project loss that led to a sharp 70% miss for Voltas's profitability. The JV loss was 33 crores, which expanded on a year-on-year basis. Last year the project related loss was 29 crores. So the project business is also facing a lot of headwinds for Voltas. Now, according to the brokerage UBS, there is a challenge for Voltas to really regain the lost market share, and the operating margin pressure is clearly visible for Voltas. So single digit volumes and single digit margins have probably disappointed the street, and the brokerage does believe that there could be some further downside to the stock. UBS has a neutral call with a target of 885 on the stock of Voltas. So let's see how really Voltas shapes up moving ahead, but for the quarter there has been clearly some issues with regards to the overall profitability for Voltas. I'll see you on Monday. Enjoy your weekend, and for all your business news and updates, stay tuned to Money Control.